traders, thank you for clicking on this video. In today's session, I'm going to be talking about the difference between supply and demand zones and order blocks. Make sure you watch to the end and receive all the information. Okay, and without further ado, let's do this. Alright, so first of all, what I like to see in the charts is that I like to identify what is the market direction, what is the order flow. Okay, so I get my path tool and I map out the swing highs and the swing lows, just like so. So I can see that the market is trending upwards. So when you see that the market is trending upwards, you are looking for demand zones. The demand zone areas. How do you identify a demand zone? Real quick. You identify a demand zone by seeing where was the last impulse. So we can see that there was an impulsive move over here. That's an impulsive move. Another impulsive move. Okay. So in between those impulses, there are retracements. A retracement is a pullback. For this section right here, that's a pullback. That section right here, that's a pullback. Here also, that's a pullback. So within the pullbacks, that's where the demand zones are. The demand zones are within the pullbacks. In this section over here. In this section over here. And in this section over here. Okay, all these areas have a demand zone within them. Just like so. Okay, but how do we draw these demand zone areas? Now remember that these are areas. Now this is a 4H time frame. So just like so. Okay, why did I draw it like that? Because when the impulse happened, when we draw out the impulse and now go backwards to see, so these are the blue candles. Where was the last black candle? These black candles, these three black candles, is the demand area. That's where the buyers are based. That's where the buyers are waiting to push the price to the upside. That's how you identify where in the market are the demand zones. When you get a impulse, retracement, and another impulse in a bullish market, the buyers are going to be within the retracement. This is that area over here. So the impulse is going to be blue. In my scenario, different traders have different color schemes on their charts. So the buyers are here in black. So therefore, I'm looking at the impulse, I'm counting backwards, and when I see that the candlesticks have changed color from blue to black, that first candle, I'm going to mark it out. And because I can see that the whole area is actually right here, I mark out all these three candles. So that is how I identify demands within the Forex market. Okay, now, how do we identify the order block? So once again, all of this is a demand zone area. Okay, the difference is that demand zones and supply zones, there are large areas in the market that push the price either down or up. Order block is an actual order block. So for us to find it, we have to go down to a smaller time frame. What I like to do is that I like to go down to 1H. Okay, so it's still the same area, but now I've dropped down to 1H time frame. So this is our retracement, but on a 1H time frame. As you can see, we now have more candlesticks within our time, within the chart. So once again, we get our path tool and we have all these areas. Okay, the last impulse was this section right here. So we had an impulsive move from this section over here. So now I have to go backwards and see where did that impulse start. The impulse started around this section over here. So now we can, this is the last candle that pushed the impulse to the upside. However, I can already see that when this impulse was happening, there was another liquidity grab. The impulse started going up like so, and then there was a move to the downside before the market went to the upside. This section over here is where the order block is. Can you spot it? Right here, have a move up, down, up. That's the liquidity grab, and that's the move to the upside. So that being said, that means that our order block is this candle over here. This is the area where the order block is. Within the larger retracement area, which is right here, this is the 4H demand zone. We drop down to 1H time frame. We saw how the market was moving. We saw that there was a liquidity grab around this section, because when the price is trending upwards, like so, creating higher highs and higher lows, then suddenly the last higher low gets taken like so, like this. That means that was a liquidity grab. This section over here is this section which I marked out over here. This candle right here is the liquidity grab, and liquidity grab are areas where market makers establish their order blocks. Oh yes, that's where the market makers establish their order blocks. So now that we have found the order block on 1H, we're going to go down even lower to M15 time frame. Right there. It's still the same area, but right now we're dropping down the time frames to see which candle was actually responsible for the order block being formulated in the Forex market. Remove all that, keep the chart clean. Now let's not forget that this bigger box is the demand zone area. Okay, so this is that same time frame. This is the 1H candle which grabbed liquidity. If you can see all the swing lows, see it was strengthening upwards, then that was the liquidity grab, and then the price went to the upside. So that has showed me that this candle right here, the last candle which grabbed the liquidity, this is the order block right here. This candle right here is the liquidity grab. Pardon. This candle right here is the order block. M15 time frame, we were able to spot it. We went from 4H all the way to 15M, and right here, ladies and gentlemen, is how you spot and identify order blocks within the Forex chart. And look at the reaction that happened. We had the Asia session right here. Then we had a stop hunt of the Asia session low. This was the London session open. We had the stop hunt of the Asia session low liquidity. And then the price went deep inside the order block, mitigated, so the market makers mitigated their orders and then pushed the price to the upside in a very impulsive manner. So this right here is the evidence that this is actually the order block. When you see sharp reactions that are very impulsive from certain candlesticks like this demand zone, that in itself is an order block. Ladies and gentlemen, thank you for watching this video. Thank you for hearing all the information. Do not forget to subscribe, comment below, watch all the other videos. I appreciate your time, and I'll see you guys in the next one. Take care.